Hey everybody, Boris, welcome to the weekly technicals for April 10th to April 14th of 2017 for the majors for euro dollar, dollar yen, and pound dollar. And I think the theme this week going forward is dollar gets ready to rally. That's something that we had an inkling of last week, but this week really, or the end of the last week, has really proven the fact that dollar is bounced off some key support levels and has a chance now to really move forward, even though this week is not nearly as data heavy as last week. So let's just take a look at it the week first and see how the week shapes up. I have the whole calendar here, including the COM dollars. We'll talk about the COM dollars in a minute. But the basic story in the dollar this week is actually very mild. We only have PPI. We have really the only data set that we have out of the dollar is Friday's core retail sales and retail sales, which will be important, no doubt. But until then, there's just literally nothing on the calendar on the dollar side. Yen has nothing on it. The cable does have CPI and average earnings, which will be very important to watch for two reasons. We're going to watch to see if the average earnings are actually decreasing substantially, and contemporaneously if the CPI is increasing. If you get this combination, deadly combination of rising inflation and tepid wage growth, I think cable is very vulnerable for further downside, which is all goes in play for a stronger dollar as the week goes by. The levels this week, I think, have really moved significantly. So on the resistance side, the euro dollar 107, support now is really 105. You could make it 105.50, but I think support realistically now lies at 105. Dollar yen was most interesting, and that's perhaps was the biggest signal to us that the dollar was able to survive the onslaught. It came 4 times for the 110 level and held it. And I think really when you look at a dollar this week and you sort of analyze the whole broader picture of dollar strength, that's really the most important factor to keep in mind. Remember a long time ago when we were very negative dollar yen and we said that until 115 is broken to the upside, it's a sell the rally trade? Well, it's a sell the rally trade, and our target was 110. So now we've had 4 times where we've tested the 110 and we failed to break the test. So now the whole dynamic has really changed. It's basically buy the dip time until and unless the 110 gets broken. So that's the key thing. I think the dynamic has completely changed now. And it would have been great to kind of pick it up a little bit early, but you can almost never pick it up so early. It's early enough that I think there's still enough pips left for the profit side to the upside that any kind of a dip in a dollar at this point is probably going to be a very decent trade for the beginning of the week, perhaps even all the way through the end of the week. We'll see how the flow goes. But most importantly, this is the key risk point to me across the whole dollar sector. It's this 110 level. As long as that level holds, you can feel pretty confident that dollar rally is on your side. And cable really backed off the 125s. Now really eyes 122.50, especially if that data set that I talked about, higher CPI, lower wage growth, comes to fruition. It becomes much more vulnerable as a trade. Let's take a look at the charts here. And, the interesting thing about the euro, and it's easy, of course, what is that, hindsight? They say hindsight is 2020. The euro gave a pretty decent sell signal a week ago, but we missed it because it still looked like a upward trend. I mean, the trend was still holding the higher highs, and we were thinking that it was going to hold here and bounce. But the sell signal saw 0 bounces, and then it had a continuation move. So now you have to have a lot more confidence in the squeeze to the downside. Now, the euro has, ironically enough, a pretty decent economic posture, but there is a very negative monetary and a political risk against the euro. On the monetary side, the low inflation readings are really creating an environment where the market thinks that the ECB is going to maintain QE, will not taper, and therefore the divergence between the Fed and the ECB is going to actually become wider. On the political side, and this is where it gets very shaky, yes, the French election's coming up. Yes, Le Pen still pretty much holding at 25 and no better than 25. But 25 is dangerous enough, and let me explain to you why. The unfortunate, very, very unfortunate terrorist attack in Sweden on Friday, I think revived fears in the marketplace that you could have a lone wolf ISIS attack, and in fact, very much not lone wolf ISIS attack, that could happen in France right before the election. Now, the big question then is the French electorate savvy enough at this point to understand that this is very much the desire of ISIS and the terrorists in the Middle East to essentially elect Le Pen and create further turmoil in France. I wouldn't even go past it that Russia would be behind some sort of a terrorist plot. to basically disrupt, because they certainly would like to see Le Pen. The whole idea here is if you can create enough turmoil and chaos in France prior to the election, all of that swing vote could go to her and she could have a surprise win. So there's just enough of a risk at this point that Europe becomes very vulnerable to all of these issues. And therefore, the downside pressure on it starts to really bear. So right now, 105.50, of course, very much in view, pretty much likely going to be the level as we open up on Monday. But the more important level here is going to be this 105. If they're going to slice through 105s, you have to really back up and look at 104 as your last area of support. And that, I think, could be very shocking and surprising to everybody, because it's not a situation where the European economy is doing poorly. It's really a situation where the market is going to start panicking on a political front. And I think that's something that nobody expects. And that could be a very, very interesting dynamic as we go forward. Now, dollar yen is the exact opposite. We talked about the fact that, oops, sorry. Oh, sorry, I hit the wrong button. My apologies. What did I just do? I really can't type. Here we go. Here's dollar yen. So here's dollar yen. Very impressive here, the fact that we held the 110, as I said, 4 times in a row. This was a pretty decent closing candle. We held above the 111s on Friday. It was a nice big reversal candle on a daily basis. You got to believe right now that you want to be a buyer of the dips. You got to believe, to me, this is one of my favorite trades, just simply straight out of the gates. Just get long dollar yen, hold the 110 as your stop. I think at very minimum you get 50, maybe 100 points of movement before it finally caps out at this 112 level, which is the really big resist level. So that seems to me the best momentum trade as we go forward. I wonder if I can do it this way. Just bear with me. Let me see if I can hit it this way. Yeah, okay, that's good. So cable is the other negative trade here. Cable actually looks almost worse than euro, but and it has a lot of downside momentum. I mean, we closed on the lows, 23.70. This is a big supporter here at 23.50. As I said, 2 very negative catalysts against it with inflation and average wages. If either one of those show negative, very easily we go to 122. We go right back down here to this level. If they show positive, that'll be an interesting trade, because if you have positive data and the thing can't even get up off of positive data, then you know you're going to have a lot of confidence in shorting it against this 125 high. So either way, I think it's an interesting short at this point. What's kind of shocking in some ways is just how sudden but definitive the turn to the dollar has been at the end of the week. And I think we need to take advantage of that at the front of the week and see if we can ride it for a few more pips as the week begins. Wish you guys the best of luck, best of trading. Boris, over and out.